Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. I will also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. In trade yesterday, Nifty ended the day down 0.76%, while Bank Nifty underperformed, losing 1.65% for the day. The widespread selling was led by PSU space along with the mid-cap and small-cap counters, which lost between 3 to 5% apiece. IT and pharma sectors acted as a defensive space, ending the day in the green. Coming to the market volatility, despite all the major events such as interim budget, Fed policy and RBI policy announcements out of the way, India VIX is still sustaining around 16 levels. Key levels to watch out would be 14 on the downside and 17.5 on the upside. Both these levels are critical, considering them as being important Fibonacci retracement levels of the entire down move, that is from Feb 22 highs of 33.97 to May 23 lows of 8. Till India VIX sustains above 14, it could gradually inch higher towards 17.75-18 levels, indicating choppy trading moves for the next few sessions. Above the level of 18, the uptrend could continue towards the levels of 21. Coming to the if you see, we have stated earlier also that there could be a steady rise in volatility with the general elections approaching, which are just round the corner. So till the time, hence one should reduce the leverage and keep booking profits at higher levels. Also, one should be selectively placed in large caps and reduce exposure in mid cap and small cap counters where the results are not coming in line with the price moves. Coming to the macro factors, while the dollar index and the US 10-year bond yields have been trading at elevated levels of 104.15 and 4.17% respectively, it is Brent crude prices that are witnessing a fresh move on the upside. Brent crude oil prices is nearing its swing high. Till it holds on to the levels of 78, there is a likelihood of this momentum extending up to the levels of $85-86 a barrel. This could act as a headwind for the domestic equity markets at higher levels. Coming to our markets, Nifty, the index will witness resistance at higher levels, that is around 21,750, 21,800 zone, while support is placed at 21,555, 21,580 zone, which is formed by an upward sloping trend line formed by joining important swing lows, the low of 18,837 formed on October 23. Below 21,550, index could witness a continuation of the correction on the downside up to the levels of 21,430, 21,380 levels. In trade yesterday, Nifty futures ended the day down 0.67%, while the cumulative OI surged by 1.4%. Nifty PCR is currently weaker at 0.65 levels, with the aggressive call writing witnessed in 21,700 and 21,800 strike, while strong put writing is seen in 21,600 and 21,500 strikes. The overall range for the coming few sessions could be 21,450 on the downside and 21,830 on the upside. Coming to Bank Nifty, after a brief recovery on Friday, Bank Nifty resumed its underperformance and continued trending lower, and in the process it has closed exactly at its 200 DMA, making this the fifth retest in over 12 sessions. Failure to recover from this zone may attract additional selling pressure in the index. Going forward, the 100 DMA zone, that is the levels of 45,300, 45,400 is likely to act as resistance, and till this is not crossed, expect selling pressure at all rises. Support is seen at the zone of 44,750, 44,700 levels. In case 44,700 breaks, the index can test its next swing support placed at 44,200, 44,300, followed by on the downside. Above 45,200, Bank Nifty could witness short covering move towards 45,600, 46,700 mark. On the open interest data, Bank Nifty futures lost 1.76 while the cumulative OI surged by 5%, implying short build up in trade yesterday. Bank Nifty PCR is currently weak at 0.54. Significant open interest built up is witnessed in 45,000, 45,200 calls, and on the put side it is majorly seen in 48,800, 44,800, 44,700 puts, implying a range of 45,200 and 44,500 for the coming few sessions. The most influential stocks whose earnings are due today are Eicher Motors, Hindalco, IRCTC and Naukri. Stocks and sectors in momentum. So the pharma and healthcare stocks are doing relatively well, even though the momentum or there is selling pressure in the market. This is one sector which has witnessed a steady rise over the past few weeks. So the likes of Dr. Reddy, Apollo Hospital, Zydus Life, Divi's Life continue their stellar performance and is evident in the way the pharma index is displaying strength at higher levels. From the broader market, selective bullish setup was observed in Bajaj Auto, HCL Tech, MRF, Coforge and Voltas. Avoid bottom fishing in PSU names until there are any signs of stable bottom formation at the current juncture. Coming to the FII DI data, in the cash segment, FI has bought to the tune of 126 crores, while DI has bought to the tune of 1711 crores. FI long short ratio for index futures is still weak around 34.10 on a net basis. This as they sold 2482 index futures. On the stock futures front, FI has bought to the tune of 18,605 contracts, while on the options front, FI sold 1,07,523 call contracts and sold 9,728 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.